Thank you, Mr. Chairman. Um, I think you're getting a theme here, that this is not a partisan issue. This is not something that there's a lot of disagreement on this committee about. We're deeply concerned about the status of community banks in this country, deeply concerned about what we hear back home in terms of overregulation, compliance burden, extra paperwork, what needs to happen. And I look at this in kind of two different ways. First, you've got the obligation to make sure that your rules make sense, to make sure that you're doing the look back. When you're enacting these rules, you're actually sensitive to some of the issues like appraisals, some of the issues like extra compliance and burden. These banks did not create the problem, but yet they feel like they have the lion's share of the burden because they don't have the economies of scale. And so what was too small, too big to succeed or too big to fail has now become too small to succeed. So it has then allowed new entrants into the market that are competing without the burden of regulation, but also has really made not just look at shutting down banks or closing down banks, but removing lines of credit, especially in the mortgage area. And so I want to kind of get to 2 points. It would be very informative to know what reactions you have had to what you've already heard in the Dodd-Frank arena, what reactions you have had to what you've already heard about the need for accommodation and retreat on some of the regulation. On the other hand, Mr. Bland, you said to the extent the law allows. And I think that's the other challenge we have here, is trying to figure out where we're going to put the burden on you to solve this problem and where we need to be a partner. And so I'm curious, as you've been going through the Agrippa process, as you've met with the community bankers in your meetings, what are you hearing about Dodd-Frank that would be impossible for you to fix without legislative action?
Our primary focus hasn't been on Dodd-Frank in the Agrippa process, right. But what we have heard,
I would imagine they don't hesitate to tell you about it, though.
In a kind of sort of way to get at it. But I think there's those themes that you touched on are the important ones in terms of the impact relative to the institution. And I think part of this discussion we've had earlier about what is a community bank, I think is an important one, because where it used to be traditional services in a defined market, it's really being stretched in terms of that definition when you overlay the competition. But banks are really challenged by what is the right business model and making sure that the rules and regs and our policies and practices mirror what those institutions are involved in.
But I think our point is, as they're trying to meet those challenges, whether it's technology and competing with online banking, competing with folks who don't have these regulations, as they're challenged, we don't want to add additional unnecessary burden on that challenge. And so I think one of the things that would be extraordinarily helpful for me as you kind of go back and look is to take a look at what you've already done in response to concerns that have been raised, and not looking at Agrippa, but looking at Dodd-Frank, and then taking a look at where you are sympathetic to the concerns that community banks or smaller institutions have, and what we need to do to fix those concerns, because the viability of financial institutions going forward is dependent on its diversity. And I could tell you stories about community bankers who didn't use QM, but yet were able to do 200 mortgages on an Indian reservation that they wouldn't have gotten otherwise. That is relationship banking, and none of us here want to preside over a federal policy that eliminates the need for relationship banking. And so I just would appreciate any information that you could get to me about what accommodations you've already made, and then what needs to happen in your judgment beyond that to accommodate the concerns that you're hearing. And we all have a role to play. I think that you guys have heard and are starting to react, but this idea, and I think the chairman talked about cost benefit, and so did Mark. How do you evaluate costs? It's not good enough to say, I don't know. We have got to get to the point where we do know, so that we can evaluate the risk benefits of what we're doing in this arena, especially as it relates to small institutions.